Hey, everybody. Hi, my name is Darius Anucauskas. I'm the global market analyst here at Markets.com. Look, it is Monday. It's the week ahead, but it's the week ahead, but it's the last trading day of the month of March. So, ladies and gentlemen, we're going to talk markets. We're going to look at what's happening. In a way, we will wrap up the month at the beginning of the week. So let's have a look. We have honestly some craziness happening this week. I think will be also full of trading excitement for some, maybe for some not. But hey, look, the market is crazy, I would say. So hey, stick around. Do not tune out. Hopefully you'll enjoy the session, and we'll jump in a bit. All right, okay. Hello, and good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the global market analyst here at Markets.com. So, ladies and gentlemen, another crazy week ahead of us. Yes. Yes, I want to welcome you. I want to welcome you to this last trading day of the month of March, and the beginning of a new week. So, look, before we jump into all the markets related stuff, let's quickly have a read through our risk disclaimer. So, yes, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I can see there in the chat room, Earth Satisfaction Paul, if I remember correctly. Thank you very much. I can see you there. Thank you very much for tuning in. Thank you everybody else who's jumping in right now. Let me just put a good morning as well in the chat room. Paul kind of beat me to it, but okay. I'll forgive you this time. No, but that's okay. That's fine. Good morning, everyone. So. Right. Also, ladies and gentlemen, before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about it. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look what's happening here. Paul, I can see your questions in there. Yes, another week of market crash, recession, natural calamities. VIX up to 30. Okay. We'll see. Okay. Look, okay, let's start off with the Nikkei. Of course, not feeling the love at all. On Friday, we sold off the cash index here. You can see it ended up being below this area, below this 37,269 territory. I talked about it, and I was leaning towards the downside. I said that if we do drop and stay below this area, I'm going to lean a little bit more towards the downside, and there we go. Boom, boom, boom. We ended up traveling towards that 35,971 zone, or basically roughly toward that 36,000 zone. Let's round it up a little bit. And we cleared that one today. We cleared that one. Did we get some data from Japan? Yep, industrial production preliminary numbers. Right. Okay, better. Some month on month better. Year on year was not very good. Okay, retail sales showed up a little bit on the downside. Oh, right, okay, if I can say it that way. So anyway, not very good. In general, the market is like in this little turmoil. Everybody's in this panic mode. We have the super Wednesday on our hands this week because we're going to be getting the this is when Trump tariffs should come in. Look, okay, there's a lot, of course. The moment I think the market is in this fear mode that everybody's selling off, like everybody's getting rid of stocks and jumping into something safer, something which has a badge on top of it, like safe haven badge on top of it, like the yen or the gold, which I don't know, honestly, that one is wow, to the moon, and how they say to the moon and back. No, to the moon period. So look, but before I go in even there, Japanese Nikkei, for now, from the technical perspective, what I'm looking at here is, look, let's put it this way. As long as we stay below the 36,000 zone on the cash index here, I will continue targeting the downside. Pretty much that's kind of it, period. If we stay below this area, yes, I'm leaning further south on this one. China 50, let's have a look at China 50. So this one's holding on a little bit better. And we got some readings from China. The activity has grown. So the general PMI, there we go, it improved. The manufacturing, it remained, well, it came out higher. It came out as expected. That's fine. And the non-manufacturing PMI also improved. So in a way, good numbers from China, but we're seeing still some declines here. Well, actually, this is why it's not updated for some reason. Okay. Anyway, I can see that yes, there is not like, but in general, China 50. Let me just double check something here very quickly. For some reason, we're having an issue or something with this on this one, because yeah, it's not moving. Oh boy. Okay, where's that? Where's that China 50 index? Let me have a look. Let me have a look. Shanghai, China 50. Right, okay, yes, we are on the lower side a little bit right now. That's absolutely fine. For some reason, our chart is stuck here. So, but okay, let me just double check very quickly here. So, yeah, we are a little bit moving lower, but we're still above this upside line. Okay. So look, guys, okay, apologies for this inactivity here. I don't know, for some reason China 50 is not moving, but yeah, again, for now, what I'm looking at here, another source, where we can see that, yes, the price is still above this little short-term upside line taken from the low of the 5th of February. So, in a way, that is still okay. That is still in line with this idea. So, in general, like I said, the China index is holding on nicely. And if you remember, I was talking about, like, in my recent kind of videos that, look, in the beginning of the year, I think we saw a lot of investors jumping into the China index, into the China market in general. A lot of U.S. investors actually. So we saw those reports, and everybody's like, "Yeah, you know what are they thinking about?" And as always, like the big money doesn't, they know what they, what they're doing. So if they want to stay in the stock market, it seems like, better stick with the Chinese stocks at this point. It's like, it seems like a no-brainer at this point, right? However, of course, don't get me wrong. Does that mean, like, I mean, does it mean that China's index, China's economy is really, let's say, bulletproof and like tariff proof? No, like they still have their issues. Everybody has their issues. It's just like, which country will have more money to pour into their economy in order to kind of safeguard it from any further crashes or something. It's like with the stocks, right? When the company is cash rich, then it's easier for it to sustain any, like, negative waves coming towards it. So that's what I'm saying. So that's why for now I would say China 50 index is the one that looks the most attractive, at least for now. However, I'm not rushing into things, because if this is going to start clearing this upside line, this 100-day EMA somewhere around that 13,000 kind of 150 zone, if all this gets cleared, that's why I have my downside line here, down this arrow to the downside from this area. Yes, a break of this upside line could also indicate like further declines, but again, I don't want to rush into things yet. Maybe this is just gonna still this is classed as a temporary correction before another possible leg of buying. Paul, I'm afraid after China invade Taiwan, I'm afraid to invest for long term in China. Look, of course, don't get me wrong. I mean, nobody's saying, I'm not even advising to invest in anything like right now in terms of like risky assets and stuff. I mean, at the moment, in general, I'm not even advising to do anything. You guys, you know yourselves better, and you know what what to do with your finances, better than me, right? So I'm here to tell you my opinion, and kind of you do whatever you want in there. In general, to invest into China long term, I personally, I don't know like what to even into invest into long term right at this point. I mean, I'm afraid. Me personally, I'm afraid of everything. Somebody might say, hey, maybe like gold. Yeah, like. I'll get to honestly, I'll get to gold in a bit because that one's like a pain in the bottom. But unless you're holding it, like or something, or for those who are shorting it, yeah, it's a bit of a pain. And look. For now with China, the situation is like I said. Yes, we're from the very short-term perspective. I believe that this is like a slightly better index, which is performing. Of course, you can see yourselves it's performing better than the U.S. ones. But just if US crashes, VIX goes up. Yeah, yeah. I can see. I'm sorry. I'm reading Paul's comments in here. As I'm afraid of VIX. Yeah. Look, with VIX, I will get to VIX in a bit when I'm going to jump into the U.S. and stocks. Stocks indices. But for now, long story short, with China, like I said, yes, I don't see anything right now, anything long term like what is good. No, but from the short term perspective, for now, for me, the Chinese index looks a little bit better than the US. So I think that there could be more money that's going to pour in from the Chinese government into the economy. So and another thing is that still there is foreign investment that gets attracted, and that's what's also helping the Chinese indices here to move back up in general. There's a lot of alternatives the Chinese companies can provide in terms of services, and we all know, and we're not without even let's say going too deep into the specifics, in the same DeepSeek and ChatGPT and stuff like that, and in terms of all the components that kind of go into all this big AI thing. But look, for now, like I said, I'll keep it here. I'll keep it here. In terms of economic data from China this week, we do get the Tianjin manufacturing PMI figure, which is coming out on Tuesday. And that's tomorrow. What's the forecast right now? There is an improvement. If this one's gonna come out, let's say at least as expected. Look, I don't think that the China index will see some sort of like lower levels. Like, at the moment, it seems like it's creating these higher lows, and the market is happy with it. So for now, I would say this way: just keep an eye on the data. Keep your eyes, of course, on the what's happening in the U.S. Wednesday, we're getting the Tianjin's composite and services PMIs from China. And then Thursday, what do we get? Like, what do we get? What do we? There's a festival. Okay, so there's a celebration. So the market will be closed most likely. Yeah. Okay, understood. Understood. Friday is, yeah, the market is closed, but it's okay. Right. Look, let's jump. You know what? Let's jump into the U.S. Honestly, I think I need to look into that. Friday was a mess. Look at this. This is a disaster move. This is something that the market is worried about, and then everybody's like just don't know what to do right now. It's not a like a recession, right? I mean, because look, Paul, I mean, I can see that what you wrote there. In general, it may lead to a recession, right? At the moment, it's not a recession. It's a slump which is getting, let's say, a lot of publicity, and everybody's trying to talk about it because, again, especially those who are invested in the stock market, everybody's trying to raise awareness, and so that the administration would kind of slow down on all the kind of talks about tariffs and all that stuff. So, and but the thing is that I think everybody's right now in this moment, in this pause where everybody's like afraid to do anything, and I think that there is a bigger agenda behind it. Look, I mean, the stock market in general has been over overstretched to the upside for quite a while now. And when somebody's thinking, oh my god, like it's falling up, but look, I mean, it has been like on a down on an up move quite like since what, since end of 2022, when it reversed sharply to the upside. Look at this, it almost doubled. And I mean, this is, like I said, this is what I'm saying. So this is where's that actually, where's that arrow? Let me just, so from the bottom here at the end of 2022, we like I said, we did around 50%, right, on top. So okay, that's great. I mean, fantastic, good result for those. But now I think the market is in this retracement mode, where it's like it's ready to go for a little bit of a correction, because again, not everything can go up all the time. And that's why you need to kind of keep an eye on these little corrections. And look, let's apply the Fibonacci retracement on this one. Yep, and let's see, from the lowest point of 2022 to the highest point, to the all-time high, which was reached here recently. We did the 23.6, and if we do drop and stay below that 23.6 again, my next target is the 38.2. I mean, we could drop below 40s. So at the moment, I think the market is kind of considering an area below 40,000 on Dow. And if that's going to be the case, I mean, look, there's a lot of companies that could be purchased later on by those other companies which are cash rich. And this is what this is where everybody's kind of thinking like, oh my god, like, but look, any crisis, any down move, it kind of presents itself with an opportunity for bigger fish, right? So the bigger fish eat the smaller fish, and this is how we grow. And then the market starts growing again. You create another illusion of the market is performing very, very well, and then basically and then you collapse again. So it's like we go through these cycles over and over, and it's just, honestly, it's like the same, the older you get, the more you see these things, like it's just repetitive. And at the moment, my question is, in general, not that I'm saying that, oh my, like the recession cannot happen. No, it can for sure, it can happen. But the thing is, at this point, I'm really curious to see if the current, let's say, administration would allow the stock market to kind of collapse a lot more. Because again, yes, you do buy out smaller fish when the times are rough, but you cannot really create too much fear among the consumers. The consumer still has to understand that okay, yeah, we had a little bit of a correction, and we're back to normal now again. So this is what I'm saying. So it's like you need to play this very carefully. At this point, I wouldn't be betting really on a much lower levels or something like that. We could do, but that's why my lower levels here, for example, on the Dow, could come on a drop below the 40,657 territory, which is the current, well, it is the current lowest point of the month. Let's see if it stays like that. But if it stays like that, then yes, we could maybe in April we could see further declines here. So that's why I'm saying I'm not rushing into things yet. Yes, it's kind of pointing a little bit more towards the downside, but not everything is that doom and gloom. If it starts falling below the 40,650 zone here, I will start shifting my attention towards lower levels, like I said, towards the areas below 40,000 zone. Sorry, Paul, I'm missing your comments here. Stock market is like a ball that you shoot up with force. It goes up and up, but at some point it will go back down. Sure, of course, that's, and hard, yes, of course, because gravity kicks in as well. Everyone says we are at that moment. That I'm assuming like you're referring to recession. Like I said, sometimes, the problem with these comments sometimes is that when I move away from the topic, and the comments sometimes come like a little bit on the little bit lagging. But anyway, I got your message. The S&P 500. Look, this one's looking a little bit worse than the Dow, and we're approaching this key area of support, which is the lowest point of March. In general, we have one more trading day left today, which is today in March, and let's see if we can create. Let's see if this one stays as the lowest point of as the lowest point of March, because again, for now, I think that on the S&P, if we're looking at this one, then there is a good chance we could see it further drift lower. In terms of economic news, look, we have economic news, but the main probably event will be the Wednesday's event when when Trump starts to kind of when we see what goes into effect, what doesn't, and also or so we were what was the phrase that I learned today? Liberation Day. Yeah, there we go. April 2nd, Liberation Day. Anyway, so yeah, when this Liberation Day will go into effect, and that's probably the top moment of this week. It's I think this is one of those moments which is overshadowing even the NFP, which is coming out on Friday. Look, let me just jump into that one. The NFP is expected. Where's that number? Average hourly earnings, participation, and employment. Okay, unemployment, non-farm payrolls. There we go. We are expecting a lower number. First of all, yes, another lower number. Unemployment rate 4.2. So we're expecting an increase in unemployment. Well, I think that these are the tariff issues, and this is when you start kind of trying, you're thinking that you're protecting the economy, but nowadays it's really difficult to be only like closed out. It's difficult to be closed and from the outside world, and when we're all so connected, it's nowadays it's just easy from one part to another part to get the message out. It's really, I don't, like I said, when people start saying that, oh, we would like to go back to the old days and everything. If you want to go back to the old days, you have to kind of totally destroy internet and just go back to prehistoric world. But that's the thing, the convenience. Everybody's getting used to convenience, and you didn't have convenience back then. And I'm not saying that back then was bad, but or let's say right now is better. No, we have our problems. They had their problems. Everybody has their own problems. Every generation has their own problems, and that's why it's like you cannot really like close out from the world. And when you're imposing, you don't have to cut on something. You have to improve on your side. But you see, the problem is that it's always more difficult to improve, to create something like something new or something, or you have to encourage your own. But I think that yes, maybe some people see that, and that's why they go to these drastic measures. As we're not going to allow you to buy, or if you want to buy, here's a tariff on. Anyway, look, for now, long story short, I would say this way, that if you're looking at some lower levels on this one, on the S&P 500, then 5,500 zone, this is something that I'm watching in order to go for some lower levels. If we do clear that, I'm gonna lean a little bit more towards the downside. Nasdaq 100, this one's already doing that, so hey. This is not really feeling the love. You can look at this stock. You can look at this stock. You can look at this stock, and honestly, this doesn't really look very well. However, if you are with money and you're currently sitting, on a pile of cash, then this could eventually present some nice opportunities later on. So even, let's say, looking at Google, look at this stock. I mean, dropping like flies, honestly. Yeah, I mean, look, of course, these stocks will reverse back up at some point. That's not a problem. We will see something like that happening. But at the moment, we're getting something a little bit more severe, and we're just we're waiting to see what's going to happen with the tariffs and all that stuff. Let's jump into VIX actually very quickly. Let me just put in this one. So yeah, VIX. Look, I mean, we can see this. The fear is picking up, and we're seeing. I mean. Paul, I mean, yes, you mentioned 30. Okay, if it clears this 26.5 here, yeah, I mean, of course, I will aim for that 30 zone. I think it's quite logical, but at the moment, look, I'm the sometimes the contrarian, what I am, and I do believe in when there's a lot of talk, when there's a lot of hype about something, it kind of backfires at the end. So what I mean by that? So everybody was like, when before the inauguration in January, everybody was like, "Oh, we need to buy cryptos because I believe that he will say something during this speech, and then tell something crypto related, and then basically we will see, like this one exploding and, Bitcoin traveling to 150 and beyond, right? But that's why I was cautious with this because, again, it became way, way too obvious. Now everybody's talking about recession. Everybody's like jumping into this fear. So it's again becoming obvious. And that's what I'm saying. I mean, I'm trying to keep it, careful at this point. I'm not trying to jump into panic mode, no, but at the same time, I'm not really getting very positive. Let's jump into dollar index. Dollar index is drifting lower, but I said to you, look, last week, I said if we do drop back below the 103.75 territory, I'm leaning a little bit more towards the downside. And at the moment, I'm going to stick to that game. Yep. I'm not really going to invent anything else here. I'm just going to stick to some lower levels at this point, but again, very carefully, because my preferred scenario to the downside would be from here, from this lowest point of March, which is near the 102.83 zone. Let's see what's going to happen there. The German index DAX. Okay, look, Europe is not going well, not doing well as well. I mean, they're also waiting for with the Trump's like tariffs and everything, and also there is another thing here happening. I mean, the moment like initially when we saw these positive moves here on the DAX, these were like the talks that like, oh, the Ukraine war is gonna end up and end quicker and blah blah blah. But now it's stalled and now it's stalling and everybody's doing. I think it's dragging again and basically yeah, basically like the talks are pushed away and everybody's back in business, right? Military spending is back in business, military stocks are back in business, and one of these stocks, let me just double check here, let me just see what's happening here. Yeah, there's like we need to recover. Yeah, Lockheed Martin, RTX, if I'm not mistaken, is that? Yep. Raytheon Technologies. You see, these guys are not really doing bad. These are okay. These guys are producing missiles. LMT, Lockheed Martin is producing fighter jets. Business as usual, right, for those guys. DAX. Oh, wait, Rheinmetall. Rheinmetall as well, the European. Yeah, there we go. It's still okay. Not really selling off. The market is selling off. These guys are still afloat. So, like I said, business as usual. But unfortunately, this is like I said, this is what we see nowadays in the world. But look, German index DAX is drifting below this upside line, below this little short-term upside line taken from the low of the 21st of February. And my next target is this upside line taken from the low of the 19th of November. So, hey, I'm not rushing into things. I just want to see if we're going to clear this whole area or not. If we do, if we clear this area, oh, no, I don't need this line. I don't need this line. Hey, if we do clear this area, this upside line, my next target is the 100-day EMA. That's what I'm going to do. But at this point, I cannot really say that I'm going to be very bearish. No, the bearishness has already kicked in, and we kind of we could be missing out, on the game here. But what can I say here is that look at this little short-term upside line. If we somehow do drop below the 100-day EMA and stay below it, well, I mean, we already dropped below it, the 50-day EMA, sorry. If we continue to trade below it, then yes, I'm leaning a little bit more towards the downside. But again, I'm going to be very careful near this upside line because if it provides good support, a little bit of a rebound here could be possible. So. Sorry about that, ladies and gentlemen, just having a little bit of tea. Very quickly, with the economic events from the Eurozone. this week. Look, I don't think that there's much. So we have a few speeches, manufacturing PMI final one coming out tomorrow. Okay, Lagarde speech here, flash inflation numbers. There we go. So in the estimates will be coming out at the moment. Do we have like a forecast CPI core? Yeah, lower number. Well, look, if it comes out on the lower side, this inflation rate, there we go. If it continues to come out on the lower side, this is like a perfect cocktail for the ECB, because again, the ECB does want to continue with its rate cuts, but during the next one, which is in April. Let me just tell you when that's gonna be. That's going to be on the 17th of April, the next interest rate decision from the ECB. So those guys basically are saying that they're going to pause a little bit. Well, obviously, I think that they need to understand that these tariffs, they cannot go like this, like with those cuts for like constantly. But again, they're trying to boost. I mean, they're trying to boost lending. So yeah, well, I mean, obviously, when they need to spend more money now on military, and they need to get that money, so the money will come from financial institutions, and well, the lower the rate, the better. So, but again, during this April meeting, they're not expected to go and lower the rate. However, if it comes out as a surprise, maybe this could help DAX reverse back up. The FTSE 100 dropped. There we go. The technical picture is working out nicely. I said that if we do drop below the 8,610 zone, I'm leaning towards my 100-day EMA. I'm going to stick to that. For the upside, I'm going to say that a break above this downside line could attract a few more buyers into the game. Let's jump into my Forex world very quickly, and then I'm going to jump into commodities and finish off with cryptos. So look, AUDUSD is drifting lower a little bit. Yes, we are breaking this little upside line taken from the low the 3rd of February, but I am not really getting very bearish yet, because again, I don't think that this is something that we need to worry for now, because my preferred downside scenario is very simple here. It's from this 0.6255. If that gets cleared, the forthcoming lower low will be confirmed. But for now, we could still see a rebound from this area. If you're not really comfortable with watching this this upside line, then I would say just be careful and keep your eyes on the 50-day EMA shown here as the green line. If that gets cleared, I'm gonna go higher, period. AUDJPY, beautiful decline, beautiful technical play out here. This downside line provided fantastic resistance, as you can see yourselves, and we're drifting lower now. So I'm going to stick to the downside pretty much, to be honest. My only upside scenario is if we're going to break this downside line and go, and yeah, then I will consider some higher levels. But still, yeah, we need to overcome a few things here. 95.35 zone-ish, that's something that I am watching very carefully. Very quickly on NZD USD, similar story, kind of. You see, this is the thing. AUD and NZD do sometimes do the similar thing, and NZD USD is still holding on. So, by the way, I'm curious in that case, AUD NZD, what they're doing. Yes, it's pushing back up, or at least it tried to push back up, but Australian dollar did slow down a little bit. Okay, I'm not going to speculate too much on this, because look, tomorrow we have an important day. And tomorrow we get the interest rate decision from Australia. So, of course, just very quickly coming back to this situation here, that's what I'm saying. Don't rush, because if if the bank doesn't do anything, or okay, it is expected not to do anything, but if it says that they're not planning to go for any like cuts or anything in the near future, then I think that this could help out the Australian dollar here a little bit, and we could see a push back up. But for now, unfortunately we have to just kind of observe the price action. NZD, USD, all these guys are also presenting their interest rate decision this month, not tomorrow, but this month, and that's going to be on the was it 7th or let me just double check very quickly. New Zealand, New Zealand, New Zealand. Is it this ninth? Sorry, the ninth of, not the seventh. The seventh is on May, in May. The 9th of April, they're coming out with the interest rate decision, so the RBNZ. So at the moment we don't have a forecast, but again, their rate is a little bit on the higher side if we compare it to the European one, but the Australian one is still higher. So NZD, like I said, NZD here against the US dollar is still holding on. It's still trying to remain above this 0.5709 territory. If it does stay above it, great. I will maybe consider a move higher, but look, probably I'll get a little bit more excited with the upside if we do push back above the 100-day EMA here, shown as the blue line. But at the moment, I have to say that I'm bearish because we are near this, key area of support. We are below all my EMAs, so that's kind of already piling into that downside scenario. But again, I'm not rushing into things because this week might be very unlogical. We have the economic events, but yeah, those could be like a little bit overshadowed by the political events. US dollar against the Japanese yen, similar story. And for this one, I would like to now remove everything and start fresh again. I will bring back some of the lines here, but this is what I'm trying to say here. So are we doing an inverse head and shoulders pattern, or what are we doing here? Because look, this is the neckline, the potential neckline, and this is what I'm talking about. So this could be that little neckline, and if this gets cleared, oh wait, why is it like a little bit? Need to do it a little bit brighter, maybe. There we go. And if we do clear this neckline, which is around 151.23, I'll get a little bit more excited with the upside. So this is my simplistic approach, because again, at the same time, we could clear all the EMAs on my daily chart. For the downside, you might say, hey Darius, you're probably looking at this 148.55 area. Yes, I am looking at that one, but if that's only if you feel very adventurous. For me, I prefer to wait this one out a little bit and kind of wait maybe for a drop below the 146.54 zone, and then we'll go from there. US dollar against the Canadian dollar. There we go, pushing back up. Now this one is an interesting one. And this one is like trying to right now break the downside line. Not that maybe the US dollar is the strongest one right now, no, but it's mainly the weakness of the Canadian dollar. And recently we saw numbers coming out from, or not numbers, the news coming out from OPEC plus countries. Some of those are expected not to go with any production cuts in April. On the contrary, kind of to increase output. So if that's the case, then we could see oil drifting nicely to the downside. And this is where I said it before, and I'll say it again, that I'm still somewhat bearish in oil. And this is where, like I said, the Canadian dollar could weaken as well, because again, as we know, the Canadian economy does heavily depend on oil exports. USD CHF looking good. Yes, looking good, but what can I say? I think this, yeah, I just dropped this area here. I think the 0.8855 is the better one to watch, but I would prefer to wait for a drop below the 0.8757 territory right here. If that gets cleared, I will go lower for the upside, 0.8855. Yes, that's my upside scenario. At this point, I'm just observing the price action because it's moving sideways, and it's not really something that I am liking a lot. Okay, I'm liking the potential of a breakout, that's for sure, but at this point I'm not really touching it. While it's inside this box here, I'm not really touching it. We need to think outside of the box, right? Anyway, EURUSD, let's have a look at this one. So this one rebounded from this 1.0732 territory. Okay, look, still the 1.0950. I think that's the better option. I know it's a far play here, but if it's like this, I rather just remain sidelined, because again, I think other pairs like NZD, USD are presenting themselves with better opportunities. So yeah, that's why EURUSD is like this. Now EUROJPY, again, Still somewhat positive, but again, I'm not seeing that strong rebound. On the contrary, I'm kind of seeing a start of some sort of oscillation around the EMAs. Euro Aussie, now this one I like. Look, I talked about this one, and I talked about this last week, and I warned you about this one from Wednesday. I said that it could be a falling veg pattern here, which according to all the TA rules tends to break to the upside, and there we go. For now, it is. Well, it did already that, but the question now is, can we, and it reached my target actually, 1.7271, 1.7272 zone. So now the question is, can we clear this one and go higher? Can we go towards this target right here, the 1.7418? If that's the case, then great. And then we could see a move towards the 1.7418. That's the highest point of March. And I doubt it's gonna change, that we're gonna overshoot that barrier today. No, I think that we're gonna stay like this. But at the moment, yes, I'm leaning towards the upside. GBPUSD very quickly. So with GBP this week with UK news, let's have a look what's happening in general. So, like, I didn't go through the rest of the stuff. I mean, Australia has some news coming out, but you know what? I will still pick up on stuff like that in my Wednesdays webinar as well, because we're going to go closer to the day. Because today I am really interested how the month is going to end, because I don't want to overcomplicate my head with other economic data sets which are coming out later on this week. But what I want to do is really focus on some levels to see how how we will end March. Yeah, like in terms of UK stuff, let's have a look. Nationwide house prices, and tomorrow, Wednesday, we're getting, well, to be honest, nothing. Thursday, we're getting S&P Global, okay, composite and services PMI numbers, the final ones, that's fine. And on Friday, we are getting new car sales. Right, okay, that's going to be quite interesting. So yeah, for now, GBPUSD is stuck in a box here. And yeah, I think that we need to wait until we get outside of this little box, right? And then we could go from there. GBPCAD, yes, similar story. We're breaking the upper side of the falling channel, so that's so far so good. Now then, ladies and gentlemen, gold. I mean, look at this. I mean, this is just unstoppable. Normally, you would say, wow, this is like just a normal chart, right? Yes, it is a normal chart, but gold, I mean, okay, because it's the status of this commodity, that's what's really kind of making it more fascinating, that everybody's jumping into gold. It continues to rally. This morning we've hit the 3,100, and we hit the 3,128 zone. And now the question is, how far can we go? Honestly, well, looking at the 1 hour chart, it's showing some signs of slowdown, but again, we're being very, very careful for now, and it is really, really difficult to try to predict here something. So, long story short, for now, there is a chance for still for this one to go higher. It's the end of the month. Hey, why not to just like freaking explode everything here? Looking at this candle, wow, this is spectacular. Look, this is the magic of percentages. Look, if you look at this big candle here, this is a monthly chart, and you look at this one. This one was a move where we gained like 9.9%, right? Here from the beginning of this month till today, we're also gaining 9% almost. Actually, yeah, almost 9%. We're currently at around 9% for the month. And but like, yeah, you can see the size of the candle of this one and that one. So this is that relativity and like the numbers game. So are we gonna see a move lower? I mean, look, I don't know. I mean, honestly, this is difficult. This is becoming very parabolic, and it's looking at the weekly chart here. It's really distancing itself from all the EMAs. At some point, it will have to go down. Even I'm not talking about even the weeklies, the dailies. I mean, like, look at this. I mean, as well. So we will have to go lower at some point. The only question is, when will that happen? At the moment is really difficult, and it seems like we're trying to find some sort of logic here. And yeah, at the moment, I think we'll wait um for Wednesday, for the 2nd of April, to see what's going to happen with the announcement of tariffs. Because if those are somehow, if we will see like that, there's a pause of some sort, I could expect gold to retrace back down again. Silver, did we clear? No, we didn't clear yet this highest point of 2024. So look, this is the area that I'm still watching and still need to see a clearance of down. But okay, so far we're on the right track. We cleared the 34.22 zone. That's great. So now the question is, like, we go further north? Well, at the moment I'm kind of leaning still towards the upside, unless we stop and we start sitting below the 34.22 territory. If we stay below this area, I am gonna lean a little bit maybe for a bit of a retracement. Let's jump into oil. Okay, with oil, you can see now how well the EMAs are providing resistance. So this kind of gives me an indication that, you know what, we should not be abandoning the downside scenario. And this is what I kept on saying for a while now. I said to you, I'm not getting bearish. I'm not getting bullish on this one. I'm still somewhat bearish on oil. So that's why, yes, we had a good run. We had great fun here. Let's see how much we retraced. Was it 23 or, yeah, almost 32, 38.2? Okay, that's fine. But now, like I said, let's see if we can remain below that, below all the EMAs. If we do stay below all the EMAs, I'm still leaning towards the downside on this one. Natural gas, this one's popping. Okay, breaking the downside line. So far, you know what? I'm going to stick to the upside. I'm going to aim for that 4.46 territory. Coffee, my beloved coffee, resting on the 50-day EMA. Look, very straightforward here and very technical. A drop below that 50-day EMA, shown as the green line, could open the door to some lower levels. Well, this is where I'm going to aim then for the 100-day EMA, wherever it's going to be. Let's jump into wheat very quickly as well. This is something that I'm watching as well, because I do love these exotic commodities and I do like to see, find some sort of value. At the moment, I think that there could still be some more downside, don't get me wrong. So I'm not rushing into things yet here, but I'm still keeping an eye on wheat, because I think that there is still a good chance for this one to drift further south, as long as we stay below the 530 zone. Sugar, very quickly, drifting further south as well. And so far, I think I'm just gonna continue observing it. I don't have really an opinion on this one, so I'm just observing this one. Cotton, now this one's interesting. I talked about this, and look at this, very, very technical. I'm very, very happy, and so far, so good. So cotton is pushing back up here again, and look, keep your eyes on the the natural disasters and everything, and keep your eyes on the what's happening with nature. So if suddenly we see more reports of bad weather in, for example, in the US, then one of the top producers of cotton, then yes, we could see this one popping nicely to the upside. So just keep an eye on that one. But purely from the technical perspective, hey, I talked about this 65 territory. We rebounded perfectly. Let's see if we can clear the 100-day EMA, which is roughly around the 67.70 zone here. If we can clear that, I'll go to the upside. Let's jump into crypto world very quickly. Bitcoin. There we go. The mission accomplished. This worked out last week. I talked about it and I said to you, like, look, I mean, I'm keeping an eye on this as this rising wedge pattern, which could, according to all the TA rules, break lower. There we go. And it reached my 200-day EMA. Amazing. Am I saying that I'm going further south? I will aim for further south if we do drop and stay, if we see the body of the daily candle remaining below that 200-day EMA. Which is around the 81,000 zone. Bitcoin Cash dropping below 300, 320. There we go, clearance. Yeah, this is not looking very good. But in a way, still, there is a chance for the bulls to step in somewhere near the 272 zone, something like that, and then we could go from there. But if we do start clearing the 272 territory, this will confirm a forthcoming lower low. Ethereum is at, again, also worked out nicely like Bitcoin, and reached my target near the 1750 zone. Okay, we didn't reach exactly that. It's never the level. It's always the area around that level. So yeah, we reached this area, and now I just have to say that I'm gonna take a little pause here, because again, I do like the downside scenario, but only in a drop below the 1750 zone. Ripple very quickly. Ripple is drifting very quickly to the downside here. And what can I say? It's a little bit of a tricky one here. It's selling off very quickly, and I think that we are in a squeeze, in my opinion. We are in this triangle pattern, and we're getting squeezed. So let's see which way we're gonna break. For now, it's really difficult to find some positivity here. Litecoin. Similar story. Look at this. We broke below the upside line. I do like Litecoin, but the fact that yes, it's dropping here, I have to admit that there is a chance for this one to drift further south, especially if we do fall and stay below that 83 zone right there. And very quickly on Dogecoin, similar story, declining so far so good. Let's see if we can drift back towards that 0.1416 area. And Polkadot is falling below 4. Now this is where, yeah, it's... but look, on the bright side, we're still in the box. We're not really clearing the lower side of the box, but we're still in the box. So, hey, I would say... At this point, just be very careful. I'm aiming for the lower side of the box here, but again, I want to see what's going to happen with this 3.75 territory. If it provides good support, maybe a little bit of a rebound here could be possible. So yeah, ladies and gentlemen, that's it. That's my wrap up here for this this last trading day of the month. But also, yes, hey, I hope everybody's going to have a wonderful week. So, ladies and gentlemen, thank you very much for watching and listening. I'll have to, like I said, I'll have to finish off here right now. Paul, thank you very much for your comments. Really, thank you. It does brighten up my day in a way, because again, if I see people communicating, then it's always interesting. It's always a little bit more interesting. So thank you for that. And everybody else who was watching this show, thank you very much. I hope you found it useful. Join me on Wednesday again for another live at the same time. But well, because we twisted the clock a little bit here, and it's going to be 7 o'clock GMT time. So yes, thank you everybody, and I shall see you on Wednesday, 7 o'clock GMT time. Yeah, we'll go from there. Thank you. Stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. I'll see you later. Bye-bye.